So we haven't owned any commodities in our global fund for the last 5 years, so we've been zero. As I said, when we started the firm 15 years ago, we had about 30% in our global fund, but the last 5 years we have been zero. When we looked at it 2 years ago, the oil price was 100 and the iron ore price was 100, and it was virtually the reverse. Everybody was making supernormal returns in the industry, which meant that everybody was spending capital expenditure. They weren't leaving their free cash flow in the bank because they were earning zero, they were putting it into the ground. Since then, so from 2 years until where we sit today, the equity prices are down about 50%, and you're now starting to see a lot of the large, the Rio Tintos of the world, the BHPs, the Anglo-Americans, starting to reduce their capital expenditure. In other words, the return that they're now getting is probably similar to what they'd get into the bank. We still think you need capitulation. In other words, we think you're still probably 1 or 2 years, still too early. Now, that doesn't mean that you're not going to get trading rallies short term, because, these things are down 50% in a very, very short time. But people still like to talk about these businesses, and people still think they're very, very attractive. But when you're paying a 22 to 23 times earnings at current commodity prices, we think they're very, very expensive. So I would be very surprised if we will increase our commodity exposure near term, but over the next 1 to a couple of years, if the businesses keep derating as they are and the commodity prices keep going down, that we may start getting back into them. Capitulation really is where you get equity prices that are down usually 50% in about 3 months, in a very, very short time. A lot of times the stocks are flat for 10 years. So we've built our philosophy as invest at the epicenter of a crisis, or effectively invest when a sector is out of favour short term and then let it normalise. And usually when that happens, you have an inventory build, or you have excess capacity being built in an industry. Then the dynamics or the demand slows dramatically down, as we're seeing with China as an example. Then there is a short or a very sharp correction in a short period of time. Usually, a lot of times it goes down between 70 and 90% from their original peak. So where we sit today in the commodity space, using that as an example, we're probably only down that 50%, 50 to 60%. So if you look at oil, using that as a proxy for commodities, it averaged $100 for the last couple of years, and we're now only at that 40 type of level, or low 40s type of level. So it's down 60, but we want people, when we're investing in these industries, to say, geez, I can't understand why you'd want to own them. They're a declining business. That's what we look for.